Hey, December 4th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. A lot of the content from this show comes out of that email, as well as daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities were down in Tuesday's trading, but closed off the worst levels of the day. Trade developments remain the biggest concern for investors, and that led to a strong move higher in treasuries, sending yields lower on the day. The dollar was weaker on the yen and sterling crosses, but little changed against the euro. Gold, a little bit of a safety bid there, finished up 1%. WTI crude settled up 30 basis points. At the sector level, REITs and utilities were the only groups to finish higher on the day, helped by defensive rotation and that drop in yields. Energy and financials were the biggest underperformers on the day yesterday. As we get to the desk this morning, though, a little bit of a turnaround. Futures up about 50 basis points following 3 days of declines. Asian markets were weaker overnight. Australia, Hong Kong, and Japan all down over 1%. European markets are rallying. Treasuries are weaker with the curve steepening after that big move lower in rates yesterday. Dollar's little changed against the yen and euro. Gold down 10 basis points. WTI crude rallying up 1.6%. And here's the structure for the S&P 500. And even with 3 days of selling pressure, not a ton has changed here from a trend perspective, right? We've been highlighting the breakout level, and we've been highlighting support for the past few weeks. So the market pulled back, got towards the top end of that support zone, didn't quite hit it at the 30.50 mark. I think the low on the day yesterday was around 30.70. So near-term support remains in place, 30.30 to 30.50. Then below that at 3,000. So call 3,000 to 30.50 a zone of support for the S&P 500. Near-term resistance, 31.50, up near the highs from last week. We still think the break from the range targets 3,200 for the index. The RSI is where we're queuing today, right? Because it's holding bullish ranges. Even after this pullback in price, the RSI didn't get below 50. So if we begin to rally from here, the RSI will have held bullish ranges. That's what we've been talking about. That would signal that momentum is still bullish and that this pullback is likely short-term in nature, and the market will continue to the upside. Add to that the fact that Chaikin money flow is still bullish. I think that increases the odds of support holding and the market moving higher into the end of the year. So what do we want to do? Well, as always, we want to be focused on the leading areas in the market. We want to be focused on the leading stocks within those areas. Buy those stocks when they're oversold with bullish money flow, especially if they have bullish or very bullish Chaikin power gauge ratings. But very much the song remains the same from a strategic standpoint. Watch these levels. Odds are they're going to hold. Let's look at our market in a minute now. Stocks drop for a third day as trade remains the biggest concern. The IWM, we looked at small caps yesterday. They pulled back to test that breakout level. Ideally today, what we'd love to see is for the IWM to regain that 160 level, close slightly below yesterday, regain that 160 level to keep the breakout intact and signal that breadth is still with a strong trend in the market, as well as risk appetite. Sentiment becomes less greedy as stocks have declined over the last 3 days. One of the interesting areas for me, though, is biotechs. Biotechs have been relative outperformers as the market had pulled back. So we're going to take a look at that a little bit later in the show. And futures, as I said, do point to a higher open here today. Let's take a look at the power bars. For the major indices, Dow lost nearly 1% yesterday. 8 bulls to 9 bears. It actually was a slight improvement. Remember, this was 7 to 9 when we were discussing the power bar for the Dow yesterday. S&P 500 down 68 basis points, 120 to 104, bulls to bears. NASDAQ, underperformer on the day, down 78 basis points, 29 to 20, bulls to bears. Small caps, while lower, were actually an outperformer, only down 30 basis points, with the S&P 500 down 68 basis points, and the power bar ratio for the small cap still remains solidly bullish, 677 to 300. So let's see, as we said, if IWM can retake that 160 mark here today. Strong rally in bonds, sending yields lower on the day yesterday. According to the Chaikin power bar, small cap stocks and large cap stocks are bullish. The major markets across the board, however, are mixed. It's our stock of the day now. Auto-generated based on the power gauge rating. It's Haynes International. HAYN, the ticker symbol here. Closed at 36.68 yesterday, down 60 basis points. Comes to us from the metals and mining industry group. Power gauge rating for Haynes is very bullish due to very strong price volume activity, attractive financial metrics, and strong earnings performance. So when we take the 20 factors together, we get a very bullish rating. Strong trend above the rising long-term trend line. Strong industry group, metals and mining. What I see here is a consolidation after trying to break out. Let's look at it from a market model perspective. Our very bullish rating is met with a stock that is outperforming the market. It's been outperforming since early September. Chaikin money flow is bullish, and our overbought, oversold indicator is moving towards an oversold level. Haynes, type of name you want to consider as a bullish idea. Very bullish stock, outperforming the market, becomes oversold with bullish money flow. That's the setup that we're looking for. So for the investors who are looking to use this 3-day pullback as an opportunity to add some bullish exposure, you might want to take a look at a name like Haynes International here today, HAYN, very bullish stock leading the market. Let's look at the sector tracker now. Movement in the major sectors over the last 5 days of trading, and you can definitely see a bit of a defensive feel towards the top of the list. The only group that's higher over the last 5 days are the consumer staples, but Utes, healthcare, comms, and real estate has also been outperforming, and utilities and real estate helped yesterday by that big move lower in yields. Materials, discretionary, and financials are middle of the road. Tech has been under pressure. Tech is exposed to the trade headlines. So coming under pressure yesterday, energy just continues to be a bearish group. We continue to want to avoid energy. I told you yesterday, the XLE saw its power gauge ETF rating turn bearish over the weekend. And industrials, again, that's another area of the market that's going to be exposed to the trade headlines, which were the big driver of the downside in the market yesterday. So industrials have been under pressure. A lot of that decline coming yesterday. Let's look at our industry in focus now. I said we're going to look at biotechs, and we're going to look at biotech services. It's amazing. This industry in focus is auto-generated for this show based on an algorithm, but I'm highlighting biotechs in my note today. So good to see that I'm thinking in line with the algorithm. But let's look at biotechs over the past 6 months. Outperforming the S&P 500 by 3.5%, and the power bar ratio, which measures future potential, is strong with more bullish than bearish stocks. It's currently ranked number 12 of 21 subsectors, but it has moved up 3 slots over the past week. Now we look at different ETFs for the biotechs. The ETF that we're going to look at later in the show is the IBB. Very similar dynamic, but some of the indicative stocks here. Biogen, very bullish. Chaikin power gauge rating. Alexion, ALXN, very bullish rating. And Regeneron, REGN, very bullish. Chaikin power gauge rating. As always with individual biotech names, I think you want to really be focused on their pipeline, potential catalysts that could move the stock. But in a lot of instances, you can find some bigger names where they're less dependent on a binary event. And you want to look maybe at a name like Regeneron. Take a look at Regeneron here. Certainly a nice rounded bottom, but let's break it down. Very bullish stock, strong trend, strong industry group. Bit of a personality change over the past month. Stock went from being a solid underperformer to beginning to outperform the market in November, right after the rating turned bullish in October. Chaikin money flow is bullish. Now the stock is closer to overbought than it is to oversold. But I like what we're seeing here in Regeneron. We've gone from a downtrend into a consolidation. This earnings report back here in early November, breaking the stock higher. I think that if you're looking for some interesting names within a strong industry group, Regeneron kind of fits the bill here. We're going to take a look at the IBB, as I said, a little bit later on in the show, so we'll get back to that one, and it really illustrates our top-down process. Yesterday's S&P 500 gainers and losers, our movers and shakers on the day. Now, we're at a point in the year or in the quarter where there's not a lot of company-specific news, so the market is going to be driven very much by the macro headlines, as we saw yesterday, and kind of the key drivers and rotation in the market. So a name like CCI, Crown Castle, up 2.5% yesterday. It's a real estate stock. The REIT stayed well yesterday with rates coming in. DXC, nothing company-specific to send that stock higher by 2.4% on the day. Take-Two, TTWO, up nearly 2%. Again, didn't see anything company-specific there to drive trading in that name. SL Green, SLG is a neutral stock, but it's another REIT. Again, the REITs did well. SL Green up nearly 2%, 1.8% on the day yesterday. And then Newmont announced a repurchase program, and that sent that stock higher by 1.65% on the day yesterday. On the loser side of the board, APA continues to trade lower following commentary about one of their wells, down nearly 6% yesterday. UNM, nothing company specific there. A very bullish stock gets hit for 5%. Maybe we want to take a look and see if that stock has become oversold. EXC, this name continues to be volatile. We've seen it on both sides of the board over the past few days, down 4.7% yesterday. Freeport McMoran, FCX, part of that materials group, down 4.6%. Didn't see anything company specific on that name. And then the retailers came under pressure yesterday in and around those trade headlines. L Brands, been a name that we've seen here on the loser side of the board quite a bit lately, really since a couple of weeks ago when they announced their earnings. It's a bearish stock, down 4.5% yesterday, down with the rest of the retail space. So it's Wednesday. We look at sentiment on Wednesdays. And what I can say here is that sentiment has become less greedy as the market has pulled back. Now, the 13-period moving average of the CBOE equity put call ratio got down to a point where sentiment was too frothy, really, right? We've talked about when it breaks below this kind of 0.6, 0.57 level, that's a sign of a little too much excitement in the market. You can see other instances over the past few years where we've gotten down to that level, tending to coincide with near-term tops in the market. And that was the case. We started pointing it out a couple of weeks ago. Now, as the market's pulled back, it's starting to alleviate. Still a little bit on the frothy side, but it is starting to become less greedy. Additionally, take a look at the VIX. With the market coming in over the past 3 days, nice spike on the VIX. The VIX at the end of last week was under 12. We get a spike here to close to 16. So sentiment becoming a little less greedy with the market coming in over the past 3 days. That is encouraging. Not quite at a level yet where we would say, wow, we're too bearish, obviously. That takes place when this put call ratio is up here around the 0.75 area. But some of the greed and some of the froth as it relates to sentiment has been alleviated over the past week or so as the market has pulled back, especially with the big moves lower yesterday and on Monday. Now, we said we were going to talk about biotech. Let's talk about it. Here's the IBB. The iShares NASDAQ Biotechnology ETF has been pretty much in a consolidation for the past 12 months, but we recently had a topside breakout or an upside resolution to that consolidation that was confirmed by momentum. Look at the overbought, oversold the RSI becoming deeply overbought with this rally, right? So what do we have here? We had a bullish divergence at the low, a breakout confirmed by momentum, and now we have IBB going from a big underperformer to outperforming relative to the S&P 500. So we've had this personality change for the biotechs, and I do find it interesting that with everybody concerned about the market over the past 3 days, the biotechs have held up. Look, the relative strength is actually getting stronger as the market has pulled back. So this becomes an interesting group for me. Again, stock selection really becomes important. I like to look at biotechs as a group. So I think if you want broad biotech exposure, it makes sense to look at a fund like IBB that has a very bullish shaken power gauge ETF rating. Look at the bull-bear ratio here as it relates to our ratings. 58 bullish or very bullish stocks for 36 bearish or very bearish stocks. Fund is above a now rising 200-day moving average following that breakout. So if you don't want to take on the individual company specific and sometimes binary risk, well, you can get biotech exposure by owning a broad-based ETF such as the IBB with its very bullish rating. And really to illustrate our top-down process, right? What is the market doing? It's trending higher. What's one of the leading sectors of the market? Healthcare. What's a leading industry group within that sector? Biotech. Take a look at healthcare here. So biotech is a leading industry within a strong healthcare sector. Again, similar dynamic. After consolidating for much of the past 12 months, we have an upside breakout through resistance for a very bullish ETF, 32-3 bull to bear ratio, and that breakout and subsequent move higher confirmed by momentum with RSI moving to an overbought level and XLV going from an underperformer to an outperformer. That is a great illustration of our top-down process for looking at the market. What is the market doing? It's rising. Well, what sectors are leading? Healthcare. Well, what's a leading industry group within the healthcare sector? Biotech. Now you can start to drill down on individual names. That is our process. I want to thank you for spending your morning with me. I will be back here tomorrow. Have a great Wednesday, everyone.